Oh, Amgen's obviously not in the insurance industry, but they all fall under the healthcare umbrella, right? Like when you look at the sector classifications, they all fall into that category. But yeah, I don't know. Is it AI? Is it new breakthroughs in medicine? Is it I don't know. It's interesting because something's happening and it's been happening for about a month. We picked it up on the terminal, the Trinity terminal, beginning of October. And it was kind of like a slow bleed out of tech, and then the bleeding in tech accelerated, and it's just gone straight into healthcare and biotech. So it's really amazing to see this rotation playing out in real time.
Yeah, pharma. I've liked pharma for a while because the valuations are ridiculously cheap. It's the cheapest they've been in 40 years.
Yeah,
Everybody hates it because they're chasing the AI trade. And the fact of the matter is, once we go into a correction, which we are in now, it's beginning. And I don't think we're even 1/10. We're not even 2% the way through this. I think pharma is going to get more and more love because of its defensive rotation nature. I really do believe that. So I'm glad we're on the same page there, but we're probably not on the same page in other directions. But let me get to the theme of the day, Gianni. Indulge me on this for like 3 minutes. Um, every day I come on here, Johnny, there's like I have a theme. You have a theme, like you have garbage day. I love garbage day, by the way. I love coming to your garbage day on Fridays. It's one of my
yeah.
favorite things. Um, I have a theme that come in every day and try to make it interesting, funny, irreverent, sarcastic. Because Gianni, I just think Wall Street's full of it. I think all these people
Oh
lie.
yeah.
They don't really know what they're doing most of the time. They're just chasing performance and then they use
Listen,
narrative. Whereas the people who are consistent, like you and me, we're the ones who kind of like don't listen to the noise and know how to kind of filter it out. I'm going to call today crossing the Rubicon. So let me pull this up for people who don't know what crossing the Rubicon is. And let me pull up a graphic. Johnny, do you recognize this face at all?
it's Pontifex Maximus Gaius, Imperator Gaius, and Julius Caesar.
Yeah. There, see the man. The man is educated, people. Yeah, it's Julius Caesar. See, the idea here is once upon a time, way back in, get this, Gianni, 49 BC, before Christ, in January 49 BC.
Yeah,
Um, it's an idiom. Crossing the Rubicon's an idiom, which means that the passing of a point of no return. That's what it means, because it means that it's an allusion to the crossing of the river Rubicon from
yeah.
the north by Julius Caesar way back in January 49 BC. The exact date's actually unknown, so it's just kind of circa. But scholars usually place it on the night of January 10th and 11th because of the speeds
Yeah.
at which the messengers could travel at that time on horse. So it's often asserted that Caesar's crossing of the river precipitated Caesar's civil war, but Caesar's forces had already crossed into Italy, your home, your home turf, right?
Yeah,
And
yeah.
occupied what was called Aminium the previous day. So, long story short, the civil war ultimately led to Caesar's becoming dictator for life, called Dictator Perpetuo. And Caesar had been appointed to a governorship over a region that ranged from southern Gaul to Illyricum. And at the term of his governorship ended, the Senate ordered him to disband his army and return to Rome. And as it was illegal to bring armies into the northern border of Italy, it was marked by the river Rubicon. So it's like that demarcation point. Long story short, Johnny, I am a person who looks in three time phases. I look at tertiary, primary, tertiary, and secondary. All three of them are broken, Johnny. I'm sorry to lay this on you. They're all broken. Okay. So the idea here is we're going to correct. Now, how deep, I don't know. I'm not going to reach out. But all I do is I monitor day by day by day. So in my world, when I look at things, I put a premium on the weekly. The monthly is a little slow. So I'll throw up a weekly and I'm going to show you what I'm seeing on the E-mini. The idea here, Gianni, is once it crosses over, and you can see here, I'll show you right there. Okay, that's the crossing of the Bierman Rubicon and the Genesis cog. There's no turning back. There's no bidding. There's no buying. They're going to let this thing correct until at least one of two things. It gets down to the 50 level and might bounce, which I think is going to happen because the year-end window dressing is going to be a desperate time to keep this sucker up because of the AI story. Or if it gets through the 50, it'll go to the 40. In either case, this is going to have to cycle all the way down and retest the bottom here, which is somewhere around negative 28 and complete the cycle. I can't predict the day. I can't predict the hour. That's a waste of my time. All I know is I don't fight algorithmic tides. These are what I call glacial moves, like a glacier. That's a glacial move that's just begun. So even if we were to bounce, Gianni, that would not change my thesis at all. We've crossed the point of no return on the weekly. We've crossed the point of no return on the daily. The thing is, if we don't bounce off this 65.75, Gianni, okay, the next logical gravity point is about 6,300. At that point, I think for sure we get a really hard 300-point bounce. Yeah, as a matter of fact, we might bounce 300 point in a day, in one day, because the desperate managers are like, we got to prop this sucker up. But Johnny, it's a fait accompli. It's already done. The market's broken. Now you can defend yourself. Go with it.
Well, I do agree with your that low of October 10th. So that's kind of what I have on my radar here for a like the next line in the sand. So we still got, I think, another 150 points. Oh no, actually, sorry, about like 50 to 100 points of a little bit more downside here in stocks. But I was live with Garrett last week, and I was telling him, I was like, actually think this administration is going to be okay with letting stocks drop a little bit here, because they want that rate cut in December, which has been a toss-up. It's now become a toss-up. So I think you do get, a little bit more downside. Everyone's already scared to their bridges, and then you get that rate cut, and that probably juices us into year end. So yeah, I do think that there will be some window dressing, as you call it, and but that line in the sand for me is that, call it around 6,500. You start to slip below that. That's pretty much what you have. Let's see, you're looking at ES, right?
Yeah.
ES, yeah.
You want to bring up the SPY or the SPX?
No, ES is good. I'm looking at that too. Just want to make sure there's the same thing on my screen.
Yeah.
So, yeah, that's interesting. Why is your do you have the December? It looks like we're already retesting those lows from October.
Yeah.
But for me, it looks like we have like another 50 to 70 points lower before we do. Am I looking at that right? Or is it
You
just
might be. I'll put on a shorter time frame. So you might not too far off. The low they reported here was 65.8950. What do you got?
I have 65.40. I wonder why. And that's I'm using the December
Did you
contract.
adjust? Did you do it this here? Let me show you, because Don and I designed this. Did you
Yeah.
adjust the futures contract changes?
Yeah, I should have because you're showing the December. Oh no, it's not. It's not. That's what it was.
So you got to
Yeah, but
put
still
on
it doesn't
the,
really make that big of a difference.
yeah, you have to
Yeah.
adjust for contract changes, then you'll
Yeah.
line it up correctly. There you go.
Yeah. Well, anyways, yeah. So that's I'm with you on the importance of that low, that support zone there. That's a line in the sand, and if we are going to bounce, I think that's the probable place to do so. If we lose that zone, then yeah, it'd be hard for me to disagree with you and say that a drop to 6,300 could happen. But with that cycle model I work with, we are due for a bounce here. I mean, stocks have been dropping now for what, 3 weeks? S&P 3-4 weeks now.
Yeah.
So this is a pretty normal correction. The Dow hit a new all-time high last week. That was really the big warning sign, because the Nasdaq didn't lead on the breakout. And so, yeah, that's what I'm looking at now. Tech has lost all of its short-term momentum. That's going to have to rebuild, but it could be a big reset point. So I don't think the whole AI trade is over yet.
No.
But yeah, it's a question of when the algos step back in to buy. And I'm with you in that first level, that 6,600, 6,500. We're pretty much there. So this is the chance for them to bounce this, and if we'll see how much they are able to.
Music to my ears. You hear what he said, TheoTrade members? He said algos. Here's a guy who understands that it's not the institutions that are going to save this. It's the algos. Now, I appreciate that. A couple of things that I agree with you. A few things. Number one is, this is really healthy. It's terrible.
Yes.
No, it's not. This is
Yes.
the best thing. This is going to make stocks cheaper, and you can buy whatever you want at a reasonable level. So stop whining. These bulls, quiet, zip it, shut it. This is what you need. This is what healthy markets do. Unhealthy markets go up in a straight line, manipulated by algorithms. That's not healthy. So this is healthy. Second is, Gianni, it's not the end of the world. Johnny, it's not the end of the world. Okay. Oh, shoot. We're down 5%. Really? We're only up about 45% in less than like 7 months. So again, healthy, normal, not the end of the world. Third thing you said, which makes total sense to me. Okay, I'm going to pull this back up so you can read one of my headlines here. Ready, Gianni? Let's go to the third headline. Too little, too late. So yesterday, Fed Waller came out and did an interview on Bloomberg. There's 12 Fed governors. He backs another rate cut, okay, in December, which means like 3 weeks from now, we're going to get a rate cut. And his defense is the job market, and these are his words, is nearing stall speed. So the job market is just stalled completely. There's no creation of jobs. There's no destruction of jobs. It's just totally flattened out. For me, that's not a reason to cut rates. You cut rates because not because the economy's weakening. You cut rates because inflation's under control. I think it's too little too late. I don't think this rate cut is going to have more than a short term impact. I think when the rate cut comes, because it's coming, we're going to bounce probably 2.5% off this. And then the selling's going to start again because this is just going to be one of those like short term cocaine highs the market acts on. But Gianni, it's too little too late. I don't think the job market should factor into the Fed's decision. I think it should be inflation. What say you?
That was I do think the job market needs a rate cut. I do. I
Okay.
do. Inflation, for me when it comes to inflation, I care the most about the price of crude oil. And it's just not, I mean, that's like one of the most boring trends I've seen, in a long time. Now, what I'm looking for in terms of crude oil is I would love to see like final washout, maybe like a 10 to 15 point drop in crude oil, kind of make it like an extreme move, and then that having that corresponding to a bottom that leads to, like 100% appreciation in the price of crude oil. That's what I think will actually bring inflation back. But it's not even the rate cuts that really concern me on the inflation front. It's all the stimulus that governments around the world, not just the US, right? Not just the US. And I was talking about this a little bit, and I'm kind of shifting gears, right? Because we're talking about a rate cut from the Fed, but the only central bank out there that really has not become dovish again is the Bank of Japan. And I
Huh.
actually have that as kind of a wild card for 2026. I wouldn't be surprised if the Bank of Japan became a bit more dovish because they've not been dovish over the last few years. And they have that new government with the new prime minister. It's basically a return of Abenomics. And we know that when the Bank of Japan pivots and they cut, or I'm not even saying cut, but just like stop allowing interest rates to go up on their Japanese government bonds. I think that's the final bazooka, the final stimulus bazooka. Because even Don was talking about the Nikkei weakness today. That was very, very overbought, by the way. Because I do track that a little bit, and I think that's going to be one of the surprises of 2026. I think the BOJ is going to be accommodative again, and you're going to see all the central banks, all the stimulus are going to try and run it hot because here we are in the States where we talk about, oh, we need to run it hot, we have debt problems. I mean, don't even get me started on Japan, don't even get me started on Europe. It's way worse there than it is here.
Huh. Well, I just saw that a graphic that came out from a friend of mine that Japan hit a multi-decade high on the interest rates,
Yeah,
and that could
yeah, right.
coincide. That could coincide with the top of the market. Like I call it the ultimate inflection point.
Yeah.
So your your forecast, your crystal ball could be right. I'm just on board with your crystal ball in this sense. I don't think the U.S. market's the place to be, Johnny. I'm with you. You got to
Oh.
look in Japan and China. I think that's the opportunity here. I think that's where you nailed it.
Yeah, China's actually holding up all right. It hasn't tested that low from October yet. You take a look at FXI, you're getting a little bit closer to that. But again, the market rally over the last 7 months was just pretty much all tech.
Yeah.
And I mean, you look at the performance spread between tech and the other sectors. I mean, if tech undergoes a multi-month period of sideways action here, which would be completely normal and healthy, that's why like all of the trades that have been working for me in the last month really have all been healthcare or biotech related. I mean, I'm actually really excited about biotech. I think it's going to be a lot of fun in the first quarter. But yeah, tech is just it's just overbought. It needs rest. And this market is, the S&P is 30% of tech. So,
Well,
that therein lies the problem
look at the
is this
XOK.
market's not really.
Look at the
Go
XOK
ahead.
and SPX. Look at my chart. Look how they're
Yeah,
correlated. Completely correlated.
yeah, yeah. So this market lives and dies by tech. So
I
yeah,
mean, really, really strong. I really strong. I want to disagree with you. Not to be a pain in the ass, but you have a really strong point there about tech leading the charge up, leading the charge down. But don't forget that financials have also kind of been not the performance is not as strong, but it is outperforming other sectors along the way. Um,
absolutely.
which leads me to I wanted to get through other things just from your perspective. So Jeffrey Gundlach is one of the top 10 smartest people in the world when it comes to fixed income. He's the bond king who
Yes.
runs double line. His performance speaks for itself. Now, let's be clear here, Oliver, but let's be clear, Gianni. He's not a great stock picker. He's
No,
not a
he's not.
good S&P market timer. You have to give props where props is due. Like, for instance, you're a great buyer. I'm a great short seller. We have weaknesses. His weakness is equities, but his strength is fixed income. This
Absolutely.
is where I want to tap into your brain because you're into tech and I'm into tech, but not as much right now as you are. Gundlach is the bond king. That's what they call him. He has spoken. He said yesterday in an interview on Bloomberg that he says that private credit, not public, but like companies who are sitting on capital debt on their capital structure, private credit is a powder keg of garbage lending. Now, this is echoing what Blake, Brandon, and especially Garrett Baldwin's been harping on. I got to get your feedback on this. What do you think? How does this make a difference, or is this just a minor flesh wound?
Does make a difference because you've had credit spreads widening, and just to kind of review that real quick for viewers, is basically the difference in interest rates between private corporate debt, whether it's high quality corporate debt or junk bonds compared to treasuries, which is kind of considered the risk-free fixed income bond. So you've had that widening, and that does signal liquidity issues. But I mean, if anything, first of all, we know that the Fed watches credit spreads. We know that the Fed pays attention to that because that all comes down to liquidity. So you've had spreads widening now. Let me see here. It's been a few weeks now. You've had spreads widening since the week of October 20th. Okay, you've had treasuries outperforming corporate bonds. That's an issue. That hence the weakness, hence the hard sell-off in crypto because that's all liquidity driven.
Yeah.
Stocks have been accelerating a little bit here too. But again, if anything, that calls the Fed to action. It's the same reason why when you had the COVID crash of 2020, the Fed went out and bought not just treasuries, not just they didn't just do QE, they bought corporate bonds too. Is because they wanted to narrow that spread. They wanted to shrink that spread. When the difference in interest rates between bonds and treasuries is narrower, it signals confidence from bond markets. We've been seeing the opposite of that over the last month. So that's a big reason why there's been turbulence.
Interesting stuff here. Yeah, I'm not diving in as much as Garrett is, but there is going to be there are going to be landmines out there. There's going to be a
Yeah.
lot of private credit that's going to blow up that is linked because of their lending to AI prospects, AI projects. It's just a natural thing. The thing is, I don't think it's going to topple the equity markets. I think it may put a dent in it for maybe a week or two overhang narrative, but I don't think ultimately it's going to be the straw in the camel's back that breaks the equity markets. I just do not believe that, and I don't think you believe that either. But you know the news media, they like to run with negativity and exploit it as much as they can because when it bleeds, it leads, and they draw in more viewers. So you got to be a little bit skeptical. You have to be taking things with a grain of salt when they say this. But I think this is like a sound bite that gets Gundlach on front page. And I do believe there's an element there, but I don't think ultimately in the longer term it's going to make a lot of difference. The last macro mover today that I want to ask you on because you're the guy who follows corn. You know a lot
Yeah.
about things that come to commodities when it comes to consumable commodities.
Yeah.
This is a different animal. I call it Metallica. It's my wife's favorite group. Is heavy metal group is Metallica. You'll get the
Yeah.
pun there.
Yeah.
So
Yeah.
the world's top aluminum producer. Do you know who they are?
Like a company or a country?
Company, public company.
Is it Alcoa?
No,
Then I don't know.
it's Rio. Rio
Oh,
Tinto.
really? Okay.
Yeah, not only is Rio Tinto the largest with BHP Billiton of copper, but Rio is also the largest aluminum producer. So the company,
Okay.
this is me being the messenger. So don't kill the messenger. They're saying we're gonna add markups to all of our products across the board starting January 1st because the tariffs are driving up consumer costs. Defend yourself. How is this disinflationary? How is this deflationary? How is this figuring into the Fed's formulaic thinking around cutting rates? Or do you think they even care? Do you think they reset the mandate and said, screw it, we'll go up to 4% on the CPI at this point? because to me, this is another sign that we're heading for stagflation, which defends Blake Young's thesis.
I think you crystallized it. I think they're modifying the mandate. I think they have to. I don't think it's 2% annual inflation. Remember, 2% is supposed to be price stability, right? Even though that's literally not. The sky is green at the same time, Professor. Don't forget.
Yeah.
Um, but I think they're going to subtly. I mean, I don't think they have. There's been some back and forth on this over the years. Do they have a responsibility and an obligation to tell people up front, like, hey, we're dropping the 2%. Like, we're gonna let it be 3 or 4%. I don't know, but I don't think they're gonna have a choice. Um, so yeah, I think they want to have rates be lower than inflation. I think they basically just want to try and destroy the bond market for a few years, because that's how you at least try to tackle the whole debt situation. So, I mean, on that tariff stuff, you kind of have an interesting showdown going on right now because you got Trump and companies saying that they want to send out stimulus checks again from the tariff revenue, but then you have the Supreme Court a couple weeks ago saying, "Oh no, tariffs don't work." So I don't. it's really an interesting situation. So like, what happens if the tariffs get struck down? Are I mean, like the companies just have an excuse to raise their prices again that way, and then it's just an interesting situation you got here.
I'm stuck on this. It's like, well, if they're going to raise aluminum prices, well, then why doesn't that? It's like a domino effect. Well, if they're doing
Yeah,
it, I'm doing it. Let's raise copper prices. Let's raise
yeah,
palladium prices. Everybody's doing it, and so it just goes into correlation lockstep. To me, this is it's like throwing gasoline on a bonfire. There's no way the Fed's going to be able to keep inflation down. All
no,
they're at this point going is they're going to monitor it day by day by day. And it sounds to me like the Fed has a choice. They can micromanage the economy or they can micromanage the stock market. And they've chosen their side. They want to macromanage the capital markets over the
yeah,
economy. It's just like Garrett said, 10% of the economy of the wealthy, the other 90% of the people who are feeling it and hurting it, and the Fed has basically thrown the 90% under the bus
sure,
because they believe, and this is, I think it's a trickle down theory, which means, well, we got to throw them under the bus temporarily because if we let the top 10 percentile fall by the wayside, then there's nothing left. It's scorched
right.
earth. So there has to be somebody to survive to let the trickle down to recover. So they're going to try to defend the BlackRocks, defend the Morgans, defend the Guggenheims, defend the Goldman Sachses over the consumer. And that's what bothers me about this is that they've literally abandoned the consumer in favor of the capital markets. I mean, do you see it that way or you don't really see it that way?
100%. It's very cutthroat. It's very predatory. It's
Good word, predatory, by the way.
yeah. I mean, if I was king for a day, I don't think I would want to be presiding over a system like that. But that's the one that we're born into. That's like one of the things I try to talk to Trinity members about. And say, listen, like I'm not signing off on the way things are. I'm just trying to navigate through it, get through it, and whatever comes out of the other side, we can address then. But yeah, I don't think it's going to be pretty. I don't really see any signs of that trend. That basically it started. I don't know what, like 30 years ago, really, and it's just pretty much like my whole life. For the majority of my life, it's just been continuing that way. So I don't know what the end game is. Um, But yeah, inflation is one of the end games, and if you are in an inflationary environment, you need to own assets. So that's always tongue in cheek. I say, the new American dream is not plugging 40 hours and taking a vacation 2 times a week, and you have your home in the suburbs. The new American dream is accumulate as many assets as you can just to survive.
I, I could not agree more. I think the Fed has just thrown out the playbook, the 80-year
Yeah,
playbook, and they're just winging it. They're just winging it right
yeah,
now. And it's almost like, they're like, Star Wars and the Millennium Falcon and Han Solo, like, don't tell me the odds. And just like, let me just go through and see how one day at a time. And I think they're lost. And I just read from Andy who puts in chat, it's almost like they're all incompetent. Andy, they are incompetent. I told you,
yeah.
Powell is a total dunderhead. I'm not an economist, Andy, but I know this is not the way to run it, okay? Because inflation still is wildly out of control. They're raising premiums another 10% on healthcare as a headline. So it's a good thing that Gianni, neither you or I do not want the Fed at this point because they're not going to make everybody happy. That's the bottom line. So
No, no, it's not a good position to be in for them, I don't think. But that's where we are. I mean, at the end of the day, like this problem has been decades in the making, and they never wanted to do what needed to be done. They always just wanted to kick the can down the road, and they're just going to find new ways to do that again. And again, I don't know what the end game is here. Um, One of the things, you had asked about, kind of the Gunlack thing and the
yeah.
private credit. And I've been mulling this over in my mind because, you look at like the balance sheet of a lot of these big companies, these big tech companies,
Hmm.
and quite frankly, they're a lot healthier than the state of the government, right? So at what point could we ever actually see? And like this is a big thing because Powell and company are just big. Oh, we can print, so it doesn't matter. Could you actually see like interest rates on companies? Could these big companies, these huge companies, I mean, you have companies in the U.S. bigger than some countries. Could those actually become like more reliable than governments in terms of lending, right? Like when you look at guys like Gunlock, would he prepare to buy bonds from these companies than actual governments? I don't care if they can print, at least they'll be able to service their debt. They're going to have more infrastructure. Their value is worth more than entire countries, stock markets, and economies. I mean, it's kind of a crazy world that we're going into, but that's a scenario I've been kind of playing out in my mind is you actually see rates on some of these corporations drop below those of governments. I mean, that's usually not how it works, but
I'd
maybe
rather let
that's the future
I'd
we're
rather
heading
let
for.
Apple and Google and
Yeah,
Ruth Porat, who's the CFO of Google, run the government than Powell up there. Gianni, he doesn't fool me at all. I actually think I always call him like Chauncey the Gardener from Being There, a guy who ascends to presidency and he's actually illiterate and he only knows two or three sentences, but everybody just keeps talking to him and talking at him, and he just kind of nods his head and likes his smile. So it's enough for him to ascend to be the most powerful man in the world. That's why I look at Powell because I don't think he has any of the answers, and I think he just wings it every
yeah,
day.
yeah, yeah. Well, he's got what, about 7 months left, so that's another variable for next year. So we're gonna get a new Fed chair, and again, like the administration is gonna put their guy or gal, whoever it's gonna be,
Yeah,
they're gonna put their guy in,
yeah.
and
Trump's going to put his guy in or gal, and that's going to be the end of that. We all know he's out of this picture, but Craig's question is could it be the market like really love it, or could the market say, well, there goes my ace in the hole, and they really hate it? It's too much of a wild card right now to understand that. So
yeah,
I'll let it marinate. I think it'll be discussion January 1, but right now I'll just put it on the back burner and let it pass. Let me downshift here. Let's talk about individual stocks today that reflect the market. You're the ultimate gardener. You're the ultimate DIY, do-it-yourself guy. So am I, but not to the degree that you do. Like I'm rebuilding, repainting, and recalking my house all the time.
I
So
won't do
Home Depot,
that, but
yeah, well, somebody's got to do it. So Home Depot comes out today. I call it garden variety. And there's a pun here, obviously. Home Depot is notorious for reporting earnings that not only beat expectations, but they tend to be very upbeat. So Home Depot's down $13 today. Now, first off, the things I want to point out, I wouldn't short this stock because it was already oversold. My thought process is it goes from 426 to 360 right before earnings because the market's anticipating that Home Depot's performance or earnings are going to be not a miss per se, but going to be a sequential decline from the previous year's quarter. So Home Depot reports today, and you can see it right here. They report 374. They missed by 6 cents. Oh, it's the end of the world. Big deal, right? 6 cents is like, drop in the bucket. It's negligible. Here the market takes it, runs with it, crushes it, knocks it down about 4%. Now it's just sitting here deeply oversold and stabilized. Does this scratch your itch to buy it here? Is this a Trinity trade? Would you buy this? Or would you look at this stock and say, you know what? I'm not touching this stock until it finds a bottom and rebuilds. How do you approach something like this? And how does this a proxy for the rest of the economy? What do you say?
well, this isn't a Trinity setup, but
I know it's not.
honestly, as in terms of looking at this as a proxy for the economy, it actually concerns me greatly.
In what sense?
Well, you haven't made a new all-time high all year. I don't even think you took out that high from Did we take out that high from January? Let's see, 426.19. You did just barely. So okay, you basically had a double top back at the beginning of September. But what does Home Depot represent? Like the whole, consumers going at it themselves, like home improvements, whatnot. I mean, what could save this? I mean, lower rates. You basically need a refi boom to get people working and improving on their homes again. That's what basically happened after COVID. Everyone was at home and it was a boom period for contractors. But when I see this, that gap down, I mean, yeah, you're on support now, but I don't know. I can't remember the last time I've seen Home Depot in such a vulnerable position. It is concerning because I think it's a real important bellwether for the state of the consumer. You have that lower high this year. If I know it's only Tuesday, but if we close this week today, it'd be the lowest weekly close going back to summer of 24. Basically, this is the market saying the consumer has done nothing in a year and a half. That's not good.
I first off, it's a algorithmic descending channel, which
Yeah,
means it's totally off limits in the Genesis code. There's a 0% chance I'd buy this at any price. I do not buy on the way down. It's a recipe for disaster, and shorting on the way up is even worse because it's got unlimited risk to the upside. This is my take on this because you kind of read my mind a little bit. If the Fed sees something like this, they're going to think, well, we got to cut rates. We got to cut rates
yeah,
to give the consumer a break. But the problem is that no matter how much rate they cut, you have to split Home Depot into two directions. One are people who are refurbishing their house, and the other are people who are new home buyers. The new home buyers are saying it's totally unaffordable. I can tell you
I know.
this. In Chicago on Saturday, the city is up in arms and wants the mayor fired. My property taxes were raised 62% for the year. 62%.
What?
And they're already overpriced. Already. We're
Wow.
1/3 higher than the nation. Now we're 100% higher than the rest of the nation in Chicago. I'm appealing it. They want him fired. He lied. He basically said we're going to freeze property values or we're going to reassess them lower. But at the same time, he raised it, and the national average is 1.5 to 1.25 per $1,000. He raised it to 3.25, which is double the national average to
Wow.
make up for the incompetence. So that's why I'm on a month. My wife is forcing me to stay here because of my daughter and her job. Otherwise, I would be out of here tomorrow morning. I can't. This is
Sure.
the worst state. Ask Don. This is the worst state in the country for management of government. Not the second worst. People like California, Gavin Newsom is a dream compared to Brandon Miller. Okay, a dream. So the problem is that no matter how much you cut rates, nothing's affordable. So you
Yeah.
may have
Right.
bet the
Right.
contractors, the do-it-yourselfers, but you're not going to help the consumer at this point
Yeah.
until the consumer's wages are higher or until affordability comes down. So where is there a happy medium is my question.
Well, I don't know. Is it a matter of like the government telling corporations like, hey, if you hire so many workers, then we'll give you a tax credit? Because, Professor, I really don't know what we're going to do if the job market seriously weakens and you have inflation simultaneously. It's stagflation, right? I mean, it's not good. It's not good. Like
You
I
think?
always say this, like I don't really want to live like in a society where like people can't afford basic necessities and you're just like killing it trading the market. I mean, that's not really it's not really safe, right?
No.
Um, so I don't like what I'm seeing. But like, okay, we have the skill set, we have the tools to like help ourselves, and that's what we try and do here at TheoTrade is like help others, you know, hone these skills to better their station. But it's very and then you get a situation, there's always a backlash, right? Like, oh, okay, well, we need to raise taxes even more to make up for it, and the government's going to save you type thing. I don't know. It's dangerous. It's dangerous, and history doesn't really paint a pretty picture when you look at these types of situations. And I don't know. I hope the people in charge are paying attention because the young. I mean, I'm a millennial, right?
Yep.
I'm no longer in the youngest cohort, right? It's Gen Z. The Gen Z's those are the people in college right now. They're pissed. They're
They are
pissed, and I
very
get it.
pissed.
I get it. Like even when I was out of college, you could still like afford to buy a home, right? I mean, who wants to buy a $350,000 starter home? Because that's like what the low. Otherwise, you're buying these like, you know, areas. I mean, I think part of the social contract is like, oh, hey, you go to college, you work hard, you'll be able to afford like a decent way of life. Well, AI is taking away all those entry jobs, and I don't know. It's challenging and it's concerning, and at some point there's going to be a price to be paid. So
I
I'm
could
not
not
sure where
agree
it's going to
more.
come from.
Also, factor into this: Home Depot is one of the Dow, so
Yeah,
that's going to
right.
put a lid on the Dow. It doesn't impact the S&P as much, but it does impact the IYR and the XHB because it's a big part of the XHB. So those indices are going to be weighed down, and this is just it's not going to help the S&P. That's my point, which leads me to my next question for you because I curated this. So you and I are on the same page. Now, I won't chase this, but I know you might. So Medtronic's been one of my favorite
Oh
stocks
yeah,
for years.
yeah,
Every time it tanks $15, I literally buy it like clockwork because it just stays in a flag formation.
yeah,
This one I wasn't willing to jump the shark on and buy it, but I can tell you this. I call it safety valve because what
yeah.
do they make for a living? Heart valves, right? They
No
make
kidding. Yeah,
pacemakers and heart valves, and they're the best in
yeah.
the world at what they do. So as it stands, this is a Gianni DePoci, like Dreamstock, Medtronic.
Yes,
It's on a
yes.
new high.
Yep.
It's on a breakout. And it's not just on a breakout by an algorithmic breakout. That would be selling it short. It's on a breakout because, damn, the earnings are good. And the earnings are not just good, they're sequentially good because they went from a 126 handle to a 136 handle. Then the company said they didn't like raise guidance, but they blessed their guidance. And what markets love in turbulent times is one thing they love certainty.
Yeah,
This gives the
absolutely.
market certainty. This is a breakout. Question is, I call it safety valve because it's a place to hide temporarily with your performance. Would you chase this here, or would you say, look, I'm going to let it come in a little bit? I just want to get your feedback on this from your perspective.
Well, you're 100% correct. First of all, this is one of my setups that I love to see. I think this stock's got legs. I think you'll see it back at its all-time highs at time. So we're talking about a move up to 130, 135. Would I buy this right here, right now? I would actually prefer to see it. I think you hit the nail on the head. You got a flag formation. You're forming a flagpole. So I'd look for this to go sideways a little bit. If you wanted to buy it today, I think you could get away with it. I think that, if as long as you got like a stop loss tolerance of like 8 to 10%, I think you'll be fine. I don't think you'll get stopped out. But 100%. But what category is this in again, Professor? Healthcare.
Healthcare. And
That's where the
again,
that's where the
again,
good the
we
good
said
setups
this.
are. That's where they are.
That's where they are.
There's nowhere else. There's a couple energy, like individual energy names I'm seeing. But aside from that, I mean, all those high flying tech names, they've pulled back hard. They have to build out new bases. I'm seeing beautiful setups, like so many. It's like hard to keep track of in healthcare. And like, I don't want to be the guy that put like 60% of my portfolio just into healthcare, but I mean, I might not have a choice.
Interesting. I have a weighting in healthcare and a weighting in oil. Those are my two largest weightings. And then the
Yeah.
third is consumer staples. But while the market's getting beaten up today, I ain't feeling any pain. Like yesterday, my long short portfolios both were up. Today, one of them's up, one of them's flat. And this is what I keep preaching to, the TheoTrade members. Gianni, everybody's a genius in a bull market. When you get to a
Yeah.
bear market, it separates you. The best traders I ever met crush it in a bear market, and they're not even necessarily short. They're not. They just
Yeah.
understand how to maneuver when the
Yeah.
market's
Yeah.
getting annihilated, and they don't bite on that momentum sandwich. So to me, it's like if you can make money in a market on a day like today, you certainly know what you're doing. If you're getting completely annihilated, it doesn't mean you're not intelligent. It means you don't understand how asset allocation really works, and you're starting to believe the market's never going to go down. You have to get ahead of the curve and like swallow the pill and say, we're going to have really bad days. And you say this all the time on your segment on the Trinity Trade. You say, listen, you can't expect every day to be a winning day. You can't. You have to
Right.
prepare yourselves for April 2nd to April 9th. You just have to set your standards and go, we're going to have this. We're going to get through this. I think a lot of people got terribly spoiled and they got like played like a Pavlovian dog. I think you agree on that one.
Yeah. Well, what they do is they chase the move after it's made. right? So I'm still looking at setups in healthcare, but like the ideal timing of the entry was about a month ago, and that's when we started buying most of them, right? So there are still setups. Like if you don't have healthcare, if you don't have biotech, you don't need to rush out and buy it right now. Just like first of all, don't panic. Second of all, you just have to do the work. Do the work. We got scanners here that can help you find these setups and look where the risk reward is because it is definitely in biotech at the moment. And you don't necessarily need to chase the names that have already went up 30%. There's other ones that
Exactly.
are about to have those types of moves, and you just gotta have a tool to find them. And we got those here. So
I've got a scanner. Brandon's got a scanner. You got a scanner.
yeah.
So we do the legwork for these people. They just need to kind of jump into the program and become a member. So I got something else to throw your way. And this is like, I would rather dump this more in Don's lap, but I think you are the man who would answer this pretty well as Garrett. I don't know if you saw this yesterday. So Amazon is down a little bit, but again, it's not down for this reason. Yesterday, Amazon came out in the aftermarket and said, we're floating a $15 billion, 15 billion worth of bonds. Now, doing debt is always cheaper than equity. There's no argument
Yeah.
there. It's cheaper. But when was the last time Amazon did a bond float? You got to look back about 10 years ago for Amazon to do a bond float.
Really? Wow.
Yeah, they're doing a 15 billion, and here was their reasoning. And by the way, the stock's getting just annihilated because retail's weak. This is part and parcel of the float because it creates dilution, right?
Yeah.
It's not an equity dilution, but it creates a certain type of conversion dilution. Stock's down about 7. I think the market's sitting here trying to weigh the fact like Amazon's heavily levered into AI, right? Because they do the all world services, and that's where Amazon's going, the data centers and whatnot. Would you step in here and buy this? Do you think that $15 billion is something to worry about? Because they're saying, listen, with $15 billion, we can structure this anyways. We can get way ahead of the curve. Is the market pushing back because of what Jeff Gundlach said and said, hey, look, Amazon's playing the debt route instead of the organic equity route to fund their AI build out? Like, I want your perspective on Amazon, how you look at this and whether you'd buy this here.
Well, we've actually been long Amazon, and today we might actually stop out. I still think it'll turn around because I think it's something like one out of every uh, $8 or $10 that the consumer spends circulates through Amazon in some capacity. It's a complete behemoth. But I have a stop here. If we close below 230.30, so $230.30, we will get out. But we're pretty much flat on this position now. So we had been long Amazon, and we got in before that big earnings pop. But that's just that looks like it was a false breakout. And as the saying goes, from false moves come fast moves. It's been a fast move to the downside. So unless we get just like a face ripping rally into the close today, yeah, probably unfortunately we'll get stopped out of this, but we'll see. So I like Amazon for next year. Actually, my three favorite stocks in the Mag 7 for next year are Tesla, Apple, and Amazon. The other ones I think would just go sideways
Let,
by
let,
and
let
large.
me answer Calvin's question. Do you see Calvin? He has, how can Amazon have cash? Calvin, they do have cash. It's just cheaper to finance growth through debt than it is to use their own cash because their own
Yeah,
cash might be tied up in stock buybacks. It might be tied up in marketable securities they own. They could be laddered portfolios. So, Calvin, they have plenty of cash. They would opt to do the debt because the debt's a lot cheaper than using their own equity to do it. That's why
yeah.
they do it. So sorry to cut you off.
Well, especially if they it's not a bad deal, I guess, if they issue this debt now. I mean, we lower rates. I mean, do you know the terms of the debt? How long were those bonds issued for? Do you know?
I did not catch on that. I have to actually look it
Yeah.
up, but I did see the headline come across Bloomberg.
Yeah.
So it doesn't shock me at all. I mean, I'm just thinking to myself, well, this is a lot of money to come across. Obviously, they got big plans. So the market is doing a pushback today just because it's already, the market's pushing back on everything. So this is
Yeah.
more of a correlation trade, but it is feeling a lot more pain. Normally on a day like today, it should be down a buck and a percent and a quarter. I think the 3.5% has a lot to do with that bond offering saying, well, maybe this is going to be a little bit of a reach. We don't like the uncertainty, so it's a sell now, ask questions later situation. But I don't
Yeah.
think it's the end of the world for Amazon. Let me put it this way: I don't think Amazon's going out of business. I would bet they're
No,
not good.
no, no,
So
exactly.
it's one of those things where I'm just theory. Like for me, I would have sold out on the pop. That's just me. I take the money and run. I don't wait around. But then again, there are times when I've sold out too early and you've held things longer, and your performance bears it out because you're like, hey, Bierman made 15%, I made 50. You can't drive looking through a rearview mirror. You can't play the Monday morning quarterback syndrome game. But I do respect the fact that you have a stop because I always have a stop everywhere as well, which
Yeah.
leads me to coming to the end. We're coming to the turn, around 10 minutes to go. I got a Genesis cog at 11 o'clock, but Gianni, I have got to throw this in front of you. You have got to see this to understand this, okay? Crazy Train. Like Ozzy Osbourne passed
Yeah.
away. His famous song
Yeah.
was Crazy Train. TheoTrade members, you got to hear it. I just go on a rant, right, Gianni? Don loves the rant, okay?
Yes.
So an analyst comes out yesterday from Jefferies. Now, I don't have a beef with Jefferies. But Gianni, I put my kid through college on Jefferies. I've made more money shorting Jefferies and BAM. So I shorted BAM at 63. Look at it now. I told everybody BAM is a scam. And I was right. I told everybody. I told him Theo. How many times did I tell every one of you this is the greatest short I've ever seen? I told you it's a scam. Well, Jefferies isn't a scam. But Jefferies has a black eye because they got involved in First Brands and they got laid out to lose hundreds of millions of dollars in that First Brands deal. A Jefferies analyst came out today, and I don't want to pick on the guy, but the Jefferies analyst upgraded Oracle, upgraded it. And now, Gianni, sit back. I want you to sit down
Yikes.
in your chair in Detroit and absorb this. His target price on the stock from this point on, from here, is 85%. So if you do an 85% move from here, that would take the stock over and above the 345 and would put it closer to $400 a share, an 85% move. He says, quote, the market has got this all wrong. That too many, and remember Don did a whole referendum on Oracle saying it's incestuous and that they're over levered. Well, Don made the call of the century. I'm going to give Don props. I pick on Don a lot, but I'm going to give Don props on this one. He nailed this short. I don't short this because it's a sacred cow, but Don made a killing on this. Don kept telling me this is a scam. He got it right. Now that the stock's down, this analyst who upgraded at 345 still stands by his target price, saying it has an 80% upside because it's underappreciated in what its AI potential is. And the target price is 12 months from now. I'm going to put this in your lap for 5 minutes. Correct me. Tell me I'm a moron, that this guy has absolutely lost his mind. He's on a crazy train.
I mean, if the stock's below 250, I want to stay as far away as possible from it. Yeah.
Come on, I
Yeah.
want some fundamentals. I just want technicals. Give me something else.
No, I mean, like, so you had that big gap, right? Back in September, and that looks like an exhaustion gap. You've just been making lower lows and lower highs ever since then. You took out the lows that preceded that move. And from a fundamental standpoint, I know that the credit default swaps on this were going crazy. Like basically people are thinking they're going to go bankrupt.
Now you're reading
So,
me. Yep.
yeah, I mean, someone sniffing something out. I mean, um I look at the monthly chart, doesn't look very good. It's making lower lows and lower highs. So, again, this is one of those stocks, unless it gets back above 250, not looking so hot.
Okay, so the Genesis cog rule of thumb, the rules of engagement. Do you mind if I bring it up without being like, self-indulgent, Gianni? I'm just don't get mad at me. Here's the Genesis cog rules of engagement. Gianni,
Okay. Yeah.
read the first one.
Yeah, buying the uptrend, shorten the downtrends. Yeah.
So this guy's telling me to step in right now and buy
Yeah.
this in one of the worst downtrends I've ever seen. What the killer part about this is, to me, it's not like he's saying, well, there's a 10% or 20% upside. That I'm going to bite on that crap sandwich. He's telling me there's 80% that it's underappreciated at this point, and I'm going to give the market props on this one. The market's wrong a lot, but the Genesis cog says you cannot ever buy into a downtrend. It's an automatic losing trade. That might be the only place where you and I agree on most things.
Absolutely. I mean, it's so much easier to make money in uptrends when you're long and easier to make money in downtrends when you're short. It's not that complicated.
I'm trying to. Is he trying to make that call because he's like hanging on to a terrible? Maybe he upgraded it 3 times and goes, I got one last diss chance before I'm fired at Jefferies, and I'm going to make this call. But he could be right. I could be absolutely wrong. But at this
Well,
point, fundamentally, the stock trades at a 50 multiple.
yeah.
So if it's
Geez,
trading at
still,
a
even with
10
that
multiple, the
pullback,
guy
wow.
might put it on my face, but not at a 50, he won't.
I mean, what the stock has already dropped almost 50%. So yeah, and it's
I
still at a 50 multiple. I also want to share this
go
because it
ahead.
is the season of giving thanks,
Yeah,
right,
go
Professor?
for it.
I'm thankful for people like that in the market because we need someone to trade against, and we can't just trade against the market makers only. So this is like that really bad read on this stock. It's terrible. It's garbage. It's like worse than elementary level technical analysis or whatever. But he's bullish, and I see this as bearish. I mean, I don't have a position, but like a lot of times I find this similar situation playing out in stocks that I'm long. People are saying, "Oh, the stock's gonna, it's in an uptrend. You think it's gonna collapse? Well, it's in an uptrend." So I'm thankful for people that just read the market terribly. It's the best. I was like, it's
Take their
Thanksgiving,
money.
so it's part of what makes a market.
I could not agree more. I
I
could
mean,
not
it is. I
agree
mean,
more.
it's like I'm like kind of like making fun of them, but it's just like sometimes kids just have to figure things out for themselves. You're a parent too, so you can tell them what they got to do, but they're still going to do it.
I used to say other people's trash is my treasure and other people's treasure is my trash. But the timing mechanism and the fundamental mechanism have to align. And I don't know where this guy's getting off, but to me, this guy needs to they need to reprimand him. And
Yeah,
while I'm coming to the end of this, because I'm going to plug you on this one too, because I'm going to give you a minute's time. Like there's a Friday giveaway, and it's not just me. It's Mr. DePoche's got one too. So I'm gonna let him get in on this on the Friday giveaway, right, Gianni? We've got this
yes,
limited 50 space $2,000 worth credit. So if you turn $2, it's cost $1, it converts to $2. You can apply it to any mastermind or any trade alert service. So yesterday I got 8 emails wanting to enroll in my mastermind, which actually starts in January. Because in January, I'm not teaching undergrads at Loyola. I feel like it's like a get out of jail free card because it's just torture right now for me towards the end of the semester trying to manage 49 kids who are treat school like it's Club Med. And they always have an excuse for everything. Wait till you be Johnny. Wait till you become like a parent. My kid's turning 13 and she's a nightmare. Dawn's got a 15-year-old. I got a 13-year-old who's as precocious as Lisa Simpson. Every word out of her mouth, it sounds like she went to like a Shecky Green concert. She's out there with like Robin Williams. She cracks jokes and everything, and she's just sarcastic. It's horrible. But I digress. Look, I'm doing a mastermind. I have a trade alert service, which is the Genesis Cog. If you call this number 623-244-5657, plug, use the code word Jeff, you can get in on this. Please, people, reach out to the people on the sales line. They're there 24/7. Let me turn this over to Gianni because Gianni's probably got 2 minutes of worth of talking about the Trinity trade, and maybe he's got a mastermind working now or he's got one coming along. So, Gianni, you can close us out here.
yeah. So we do have a Trinity Terminal Mastermind session tomorrow, actually at 3 p.m. Eastern. So yes, you can use these credits for that. You can join the Trinity trade for that. So you can use either code word Jeff or Gianni. It doesn't really matter. It'll still get you the same offer. And not only will you be able to double your money instantly by making this purchase, but you'll also be entered to win a Falcon F10 trading laptop. So give us a call here at TheoTrade, 623-244-5657. Code word Jeff or Gianni, either one. Flip a coin. If it's heads, it's Jeff. If it's tails, it's Gianni. Either way. But you can use these for all the masterminds or services we have. Professors, Brandons, Blakes, Dons, Garrett's, doesn't matter. You can use them. So
Gianni, tell them about
percent
how cool
return for the
tell
end
them
of the
how
year.
cool that laptop is, that Falcon. Isn't that the baddest ass computer? Do you have one?
I don't have a Falcon, but I've
Oh,
seen them. They're cool. They're cool. Yeah.
I've got two of them. My other computers suck. It's the baddest ass computer I ever had. So fast and it's always reliable. And the tech support when you call them, like they're on call all the time, so you never wait 1 second, and they walk you through shadowing and remote assistance. It's the
Oh, that's
baddest.
good.
So that's another incentive to join. So,
Yeah. Yeah. Cool.
anyways, we've come to the We've come to the final frontier at the end of our program here. The market's fighting its way back, which I thought we would. Remember we said at that critical level it bounced through?
Yeah.
That's what you said.
Yeah.
It's doing it. So, if you want to close us out here and let our listeners like tell us, what do you think? Is it a good time to buy here? Is it a good time to unload your weak stocks? Like, how are you approaching this?
Well, again, I got the cyclical setup for a bottom here. I actually had to rework that. I was off by a few weeks, so I've been working on that over the last couple of weeks. Um, Again, I could see a little bit more downside in this market. So I don't know if this is it. But we're close. We're close. But if we do start breaking below that key level, like 6,500 in the S&P, yeah, I'm with you. You're probably going to see a drop to like that 62, $6,300 zone. But this is a hard line. We'll see if we can hold it. So it makes sense for a bounce, not necessarily the bounce yet, but there's a setup here. So we'll see if it holds.
I just like I said, we have a rule of thumb at Genesis Scott. We do not short in oversold conditions. This is an oversold condition, so I would never be shorting here. That's just
Yeah.
me. But I don't
Yeah.
necessarily buy into oversold conditions either. But I thought to myself, this is not a good day. This is a good day to add some longs. So I actually went in and added one single long today. And if you want to find out, you have to join the Genesis Cog. In the meantime, Johnny, I appreciate you joining me. We're on opposite, we're not that far because you're Detroit, I'm Chicago.
Yes.
But our thought process is you're more trend momentum and I'm more contrarian. And we
Yeah.
agree on some things, we disagree on others. And again, that's what makes a great market, right?
Absolutely. Thanks for
All
having
right,
me on,
so
Professor. Always a pleasure.
all right, it's a pleasure. I'm going to turn this over to Brandon. Brandon Chapman, are you out there? Are you going to say words of thought to Gianni? What's going on in